This is such a Polish thing, and it's so big that it's hard to even explain to somebody who's never been to Poland and maybe never is actually going to come. Uh, Żabka is a convenience store. Żabka is a convenience store. It's a special convenience store. It's a company that has a special place in the heart of Polish people and anybody who comes to Poland. Warren Buffett said that he likes to buy companies that people think about with a different part of their brain. So, Coca-Cola, McDonald's, um, stuff that people actually enjoy. Tesla, right? People who drive Teslas, it's a statement to them. They like them, and it's sort of the same when we go to Żabka here in Poland. This matters. Żabka was founded by Mariusz Świtalski. That's this guy. He's also founded a couple other companies, Biedronka, which is one of the bigger convenience stores here in Poland. Founded Eurocash, but this doesn't matter that much to us today. What matters to us is that Żabka is a special company in Poland, and it's special because of what the landscape looks like here in Poland. This is a little outdated, so by a quarter, because just today Żabka reported earnings, well, preliminary earnings, and this is the reason for this video. So right now, well, let's see. Right now we got um 12,339 stores, out of which 173 are in Romania. Big company, sure. This is where all the stores are. This is anywhere that is the closest to the nearest Żabka. If you're anywhere in the yellow area, it's a good question. What are you doing there, basically? It matters, Żabka, because most of the stores in Poland look something like this. Biedronka is famous for having a ton of wooden pallets and deliveries just lying in the aisles in the store. So it's not really a premium company. It's got better prices than Żabka. So what's important to remember about Żabka is that it looks like this, and it's a much smaller store. If you live in America, it might be hard for you to understand how we do shopping in Poland. You never really drive to Żabka unless it's really far away, unless you're living in a real shithole. Um, you would drive to something like a Biedronka or Lidl or something like that. It's rare that you would see something like a Tesco or stuff like that, where you would drive to like our Walmart. Żabka is not even a Dollar General to us. Żabka is the small company that is on every corner of every street in almost every place. And it's great because you can get a ton of different things from there. You can get hot dogs, you can get drinks, nicotine, alcohol, fresh stuff, bread. So it's really fantastic. And there's an app. This doesn't matter too much to us. There's an app. It's just a part of a hookup experience. What I do want to tell you about is why this company is special. It's special because of the management and because of how popular it has become in the Polish culture. So Żabka is often depicted in memes in Poland. If you're about 30, you probably think this doesn't matter. It does. It matters to young people. It matters to the perception of the company. This isn't really something like a Tesco or like a Walmart versus Costco. This company has a special place in the heart of Polish people. And today, Żabka released preliminary results for Q425 and for the full year 2025. And this is the reason why the stock dropped. The stock dropped from about well, let's just see, it dropped 4%, so about one zloty. This stock is available. You can buy it in interactive brokers, that's for sure. Other than that, I have no idea because that's what I use. Anyway, Żabka IPO'd about a year ago, a year maybe and a couple months ago, and ever since then it's been trading at a premium, and I wanted to buy it. And today was the occasion, and I bought a couple shares. Um, so if you read the results, the reason for drop that I think was the drop of like for like sales, which is basically the sales in the same stores. So you have this is what retailers report. If you have no idea what that is, it's what retailers report of how the sales develop in the same stores. So that if you open new stores, this takes it out, and you just see how are the old stores doing. Are they growing, declining, neutral? And the growth was 4.8, which is a drop from 7.1 in Q4. You can find this on the investor relations page of Żabka Group in English. Everything is there. Revenue up. Let's go to my model here. So I plug this in. 12,000 stores in Poland, 12,339 total. Mm, and revenue is sort of, I'm debating here because this was not given. We were given we were only given the sales to the end customers, which not all of it is their profit in the end, but uh, but I took the take rate that they used to have and sort of plugged in the more conservative version, and we'll see how that goes. I got about uh, 6-7 billion in revenue, and that would be a revenue growth of 13%. We'll see about the profit margin because they're still optimizing that. Um, in general, why I think this company is such a great buy is here. So the market cap is about 22 billion of Polish zloty. So if you look at that, that's 21,790 over 3.6, because that's how many dollars that is. So that's about 6 billion USD market cap. And for a company that has sales, I encourage you to think about this in the local currency, by the way. So this is the Polish zloty. Zloty means golden, by the way. So 22 billion Polish zloty, yearly revenue. Maybe let's do a trailing 12-month revenue of 27 billion, and well, the profit margin really does jump up and down because it was negative for a quarter, then it was 3-6%. What's it going to be this quarter is a mystery. We'll see probably end of February. Here we got 3% in 2025. But this is plugged in data that I just, these are my predictions, basically, my estimates. And the reason this company is a buy, I think, is the cash flow from operations. So in Q3, we got 1,150 million generated from cash flow from operations, about 1.7 billion the quarter before that. The first quarter was lumpy. It was about 600 million. And capex is more or less stable. So capex was a billion and a half in the last quarter, in the last year, that is, 2024. And the capex doesn't really grow tremendously for them because they operate, well, this is fake. This is fake data. So if you look into the capex, like this, together with the cash flow from operations, you get about 2 billion in free cash flow for the last 12 months. This, I should correct this. So that gives you a multiple of 12 times cash flow, 12 times free cash flow for the last 12 months. And I realize this is for the more conservative investors from the US particularly, this is a big price to pay for a company that's for you trading basically in Russia. To me, we are not Russia. We are objectively not, I think. But the point is, this is a pretty cheap company. This is one of the biggest companies. This is one of the best companies in Poland. The management of this company is crazy. What Żabka did a couple of years ago, this is important. I should have told you about this earlier. But what Żabka did a couple of years ago was the peace government pushed through a ban on trade on Sundays because we're a Catholic country or whatever, and it was for everybody except for critical infrastructure objects. So fuel gas stations, train stations, and post offices and whatever. So what Żabka did is they started providing office service, post office service. So you can now send packages from Żabka, and you can order packages into Żabka, which is also incredibly convenient because you don't have to wait for the post office guy to arrive at your door, and you don't have to wait for him for the entire day. You just order it to the nearest Żabka. You go there and give the code to the lady behind the counter and get your package. Why I'm also excited about this is because if we look into the cash flow without the negative quarter that was essentially a year ago, we're going to see how that goes. Well, cash flow from operations was positive, but against capex, it was negative, of course. So you had, of trailing 12 months, you had about 3.7 billion cash flow from operations. So that's a multiple of 6. And here, capex really is being checked. So I cannot predict how much cash flow from operations they're going to have in Q425. But even if it was 0, that's not a bad outcome. I, of course, hope it's going to be more than 0, and I certainly hope it's going to be more than negative. But I just don't know about that. Even if it is, though, I think this is a good time to buy the stock. If you assume basically anything above the 0 from cash flow from operations, then you get a company that has more than 2.2 billion of free cash flow in the last trailing 12 months. So that gives you a multiple of less than 12. And for a company that's growing revenue at 13% a quarter, and I don't have the data from before because they just went public a year ago, but the revenue grew 20% in 24, 14%, around 14%, this is my guess, in 2025, but it should be somewhere around that because we had 13, 16, and then 13% in the last 3 quarters. And they're going into Romania, and it seems to be looking, basing off of how quick the stores are looking. So basically, at the beginning of 2024, we had 0 stores there. And then in the last just 6 quarters, we went from 0 to 173 stores. So that looks pretty good to me. Long story short, I think this is a fantastic company. I think the management is insane. I think the management is crazy. I think the company holds a special place in the hearts of Polish people, and I don't see why it couldn't in other countries. And I think the price is right. It's not it's not cheap. Certainly, it's nothing like 5 times free cash flow, but it's a great company. So just like Warren Buffett said, I would prefer to buy a fantastic company at a fair price than a fair company at a fantastic price. This model is going to be available on my Patreon for free, together with a more detailed description of what I think about the company. So go there, subscribe, give me a follow, give me a like. Tell me what you think about the model. It's going to be free. And yeah, follow up. Patreon.impactfactor or @ or whatever.